All right, team. Happy Friday. We got a lot to talk about today. Rents set to skyrocket. What does that mean? What's going on there? Is the dollar dead? Well, I'm going to show you a graph that sure makes it look like it. We're going to talk about mortgage rates today a little bit. Not going to pool new rates today. Basically the same as yesterday. A little bit better. Not much. Slightly better than yesterday. But, of course, we're heading into the weekend, so hedge is built in here. We're going to pull rates again on Monday. So if you want to know what rates were, if you want to get a custom quote, use this guy right here. You can do that. Submit your scenario. All I need is you can email, text me. All I need is your loan amount, purchase price or home value, credit score, whether it's a condo or detached. Submit me that info, and I'll get you a custom quote over the weekend if you want. But there's a couple things. So you're already seeing rents rise. I've warned you of this, that this was going to happen, and this is actually a catalyst to move people into the purchase market. But sort of the initial reaction as mortgage rates go up. In fact, you know what? Let me put this on the screen. I posted this today, and I normally don't do this kind of thing. Let's see here. Oh, shows our live stream there. So we're live on Facebook. Okay, so you can see this here. Maybe you can't. I posted this. Average mortgage rate in the United States is up from 3.11% at the beginning of 2022 to 4.16%, which was reported yesterday, which is from the previous week. So that doesn't have this week's data in there. It's definitely going to go through. Is going to go higher. So we're up over 1% on average for the first 2.5 months of the year. So mortgage rates are up 1% in 2.5 months. That's pretty quick. We've seen it faster. I've seen rates go up 1% in a week. So it's been worse, but it's pretty significant. And then we're up about 1.5% from the all-time lows, which are back in early 2021. Okay, the data is lagging, so it's for sure going to go higher after this week because rates are much higher this week. And that said, we're still below the average mortgage rate going back to 2008. So before the crash, 4.36%. Now, when we talk about the average mortgage rate, we're looking at, here, let me just get myself out of here. We're talking about and this is, Federal Reserve data here. This is the average rate from the St. Louis Fed, which includes all types of mortgages. So you can see here, rates have definitely gone down over the years. They've definitely been on a trend down. We've seen them, in different situations. Like here in recessionary situation, they went up a lot, then they went down a lot. I'm not going to overlay like the federal funds rate or anything, although you could with these graphs. Are pretty cool. So check this link out in the description below if you want to kind of play with it and see what's happened with interest rates. But you can zoom in, as much as you want to. You can zoom out as much as you want to. You kind of zoom in and go, okay, well, back in 2019, actually late 2018, we saw kind of a spike in rates, which started actually is from the end of 2017 until the end of 2018. Rates were kind of on a tear higher. And the market still did really well during that period. So if you'll see right now, we've kind of got the same move going on. I mean, from here to here and from here to here looks really similar. So so far, maybe we could say, hey, historically speaking, we're not even as high as we were back then, although prices are higher. Maybe this won't have too much of an effect on real estate, just given that comparison. Although I think there's a lot more room for rates to go higher here. And I do think we're going to see fives being normal, potentially into the sixes for some people who have lower credit this year. I do think that is where we're headed. But let's see here. I was going to talk about rents rising, and I went to mortgage rates. So mortgage rates going up, long story short, is a catalyst for two things in real estate. Number one, it causes people who are renting so it causes people who are looking to buy to go and actually consider renting. I have a lot of people right now who are being told, and they're 3 or 4 months away from needing to renew a lease, and they're being told, hey, we're going to basically sell your place to someone else. We're going to rent it out to someone else 3 or 4 months ahead of when you would normally renew, unless you renew. So you need to renew now, or we're going to renew with someone else. And that's just because sheer demand is pouring in, because a lot of really qualified people who could buy a home if they could just find one or get an offer accepted are unable to do so, which is going to force them into the rental market. Also, those rising rates causes even less inventory, because a lot of the people who would normally be selling a home and buying another home, they're not going to go for it because it's just too much of a jump from what they have now. They've got 2.5% fixed. They bought 3 years ago when prices were much lower. The idea of buying with so much higher rate, so much higher prices now and upgrading and all that, it's much more difficult for people to do that, just mentally. Even if they take all that equity and pour it into the new place, it's tough to have your payment go up that much. So you have a lot of people who would normally be selling and buying in the market. They're going to kind of hold off. So they're not going to list their house. So that's inventory lost right there. So we lose that inventory, and then we get some of the discouraged buyers running and renting who are qualified buyers. So both of those things really, rising rates really works against rents in a major, major way. That said, they work with each other because as rents go up, more and more people go, well, gosh, if it's going to cost that much, we may as well buy. So you kind of get people shifting from one side to the other and back and forth. But ultimately, this is going to cause rents to go up. I've been talking about this. Also, a lot of landlords don't realize how much rents have gone up and they're really under renting their places. Well, they're waking up to this. And rents are getting raised on a lot of people. And a lot of times I get those calls. Hey, my landlord just called me and said they're raising the rent $600 a month. We're going to look at buying. So this is starting to happen. So rents are going to skyrocket. I'm telling you, not just the latter half of this year, but probably all of next year as well. Rents are going to skyrocket. Demand and again, supply. Supply is very, very low. These communities that have multiple units, even they're at their like really, really low vacancies. Some of them are sold out with waiting lists. That's wild, right? You should always be able, in my whole life, you've always been able to just call up one of those complexes and say, hey, what do you got? Get me into something. But we're just in a different kind of market right here. We have a housing crisis. It's nationwide. Here's a link. Someone actually posted this. I didn't find this article, but I thought it was interesting, some of the data they have in here. I was just going to talk about this today, and I saw someone post this. So I was like, okay, hey, let's talk about that. So that's rising rents. That's the reality. That's happening. Everyone needs to realize that. Rates also going to go up. That's also reality. Now, I said something else in here. Is the dollar dead? Well, let me show you something. I got another thing for you here. Check this out. This is also from St. Louis Fed. Now, if you were a doctor or a nurse and you were reading that, what's that little machine called? Your heart rate machine that shows you, if you're alive or not, right next to your bed, if you're in a coma or something. If you were the doctor and you were looking at this heart rate monitor, what would you don't need to go to medical school for this. You could just watch a couple episodes of Grey's Anatomy and you know what the answer is here. This looks like a dead man. Doesn't it? That looks like someone who is flatlined. Done. That, my friends, is Federal Reserve data for the purchasing power of the United States dollar. That is the purchasing power of the United States dollar right there. You know what the effects of long-term inflation are? Currency devaluation. Why things like Bitcoin and deflationary assets are all the rage. Necessary, really, really necessary. Look at that. That is from the Fed. And I'm not saying that because we can trust the Fed, but this doesn't make the Fed look good. When someone gives you information, someone gives you a report about themselves that doesn't look good, that's something that's relatively trustworthy, yeah? They wouldn't make themselves look bad on purpose. That is really bad. So when we talk about inflation, by the way, I'm going to be going on TV either Monday or Tuesday, going on One American News again. Either Monday or Tuesday, I'm not sure we're going to be talking about inflation. I'll be sending them this one. That is the purchasing power of the United States unbacked dollar right there. Death. That's a relatively slow death, peaceful death, but death nonetheless. So this is why people are, scurrying away from cash. You're seeing money flow into financial markets like crazy. Remember, I did warn this is possible. One more leg up before the recessionary move happens. When you look at things like this, and this actually has the recession gray areas here. One thing that you'll notice if you track the stock market in all these recessionary periods is that a lot of times we get a warning that this is very likely to have recession, to see depreciation in stock valuations and so forth. We get those warnings well ahead of time. Sometimes a year, 2 years before the real bubble bursts. But there's plenty of time for them to lull you to sleep. Keep in mind, too, congressional members, remember how they all agreed, even Pelosi, agreed that Congress should no longer be able to trade stocks and on insider information, all that stuff. It was bipartisan. Everyone agreed to it. I don't think anything's been signed yet, but they're drafting that, and that's probably going to happen. But as of right now, all those congressional members, all those lawmakers, all those powerful people, they're all long stocks. There isn't any one of those people who is short the market. They're all long stocks. So all the people with all the power are long stocks until they won't be able to be long stocks anymore. And I promise you, when that legislation passed, remember when I said that the real top is going to be whenever they remove all the mask mandates and everything goes back to normal? That'll be the best day for the stock market, and that'll be the very top of it right there in this cycle. Well, it might actually be the day that they announce that this bill has been signed into law, keeping members of Congress from buying stocks. Simultaneously, what are we seeing? Simultaneously, we are seeing a number of different pieces of legislation coming into Congress that's to make Bitcoin legalized and to make cryptocurrencies essentially regulated in a way that's manageable. One of the things I want you to pay attention to when they announce this bill and the details of this bill that congressional members are no longer going to be able to trade stocks, it's not going to mention cryptocurrency. That's not going to be part of it. So this is just what I call good politics. So the lawmakers get to say, look, hey, we're not going to trade stocks anymore, guys. You're right. We're sorry. Our bad. We're going to give you what you want. But now they can just do the same thing with cryptos. And that could be what catapults cryptos into the next extreme bull market. Just a theory, but it's really good politics. It's really good politics. And we live in a political world, and so I could see how exactly that might happen. So we got the dollars dying. We've got this all happening here. Take a quick gander at gold, back down to 1920. Oil, 105. I still kind of think that's going to get up to the 110, 112 area before we see another leg down there. Bitcoin has been kind of teetering with 42,000 today. Ethereum is really the one that was running big earlier. There's a lot of information about Ethereum potentially being owned by JP Morgan and all these different things. And, if that's all true, it would make a lot of sense because to me, Ethereum is a piece of crap. Anytime I've used the Ethereum network, the fees have been insane. Makes no sense. Like XRP, far superior cryptocurrency. Bitcoin Cash, far superior cryptocurrency. Litecoin, far superior. Cardano, far superior. Why is this one number 2? I don't get it. Just because it's early? There's something else going on there. Mind you this, I still think I own a lot of it. Because if there's some sort of if there's a backdoor deal to pump Ethereum, I want to be in on that, don't you? So I'm not running away from it because I think it's what might be happening there is unethical. I'm in. Count me in. I pulled the trigger. You guys go ahead. You do your thing.
All we want to do is pump you up.
Pump it up. Let's go. I'm down. All right, let's take a look at this here as well. You're going to start to see some stuff regarding this. And reminder, every market's different. The news that you're going to see is going to be national. Home sales fell far more than expected in February as mortgage rates rose and supply remained tight. So supply remaining tight is kind of the key to holding values. And remember, too, you only need 2 people offering on a property for it to be a multiple counter situation. Just remember that. It's like we've been used to trying to buy a house and you've got 30 people who are trying to buy it. You're getting multiple counter back. They're just weeding out everybody, the best 5 offers, and you're getting counters. Well, even if there's just 2 of you bidding on a house, you're still going to get the same form. SMCO, seller multiple counter offer. You don't know how many people are on the other side. Sometimes you can tell. Here's how you can tell. And it's difficult for you as the buyer to tell this, but I can tell as a lender because I'll get a call from a listing agent who says, hey, so, we have a lot of offers on this place, cash offers, quick closes. Can you shorten your time frames? I'm like, what?
Check, please.
Are you talking about? Why are you even calling me? I have an FHA offer here. Why are you calling me if you have all these other great offers? It's because they don't. So it's hard to tell, but that's how you tell. If the listing side is giving you way too much attention for how they're categorizing your offer as being weak and needing to do all these different things, then they usually have less offers than what you think. That said, check this article out. You're going to see more of this. Things are going to slow down a little bit. And it's just a matter of who's going to be impacted. Certain markets probably won't be impacted at all. I think San Diego might be one of them. Some markets might be really impacted, especially in the Midwest or some of these places where prices have just gone so out of control. So out of control. People are not used to these numbers. You're buying a house for $600,000 in the middle of nowhere, Missouri is just insane. But there's a lot of them out there now. I think those are the kind of homes that are going to suffer the most. By the way, the Russian Central Bank talking about large-scale structural transformation. What does that mean? Large-scale structural transformation. That means bye-bye to this unbacked United States dollars. I can guarantee you that's part of it. Probably some digital element there too. I don't think it will be Bitcoin. Maybe their own digital currency. Holds rates at 20%. Holy smokes. Can you believe that? That is mind-boggling. Holds rates at 20%. Check this out. This is interesting. We've got to keep an eye on what's happening in Russia just economically because there are spillover events there that could be significant for us here. It's just a matter of, is it just oil? Is that the only thing we're worried about? No, there's more to it. There's ingrainment. There's funds on Wall Street who are heavily invested in Russian companies and all these different things. And basically anything that's Russia is smoked. Anything that's Russia has just been... See you later. I mean, any company, and there's a bunch of these companies that are in Russia that are talking about relocating, getting out of there, because they're literally they're going to go out of business if they don't. So there's some just wild stuff going on in that regard, and we got to keep an eye on that stuff. Let's see what else here quickly. Oh yeah, if you want to see interest rates, before I talk about Bitcoin here, if you want to see interest rates, check out yesterday's video. Very, very similar. I'm not going to pull up everything today. It's late into Friday. It's not the best time to do it anyway. We will do it again on Monday. If you want a custom scenario, if you want to submit your scenario, email me, text me. I need loan amount, purchase price or home value if it's a refi, credit score, whether it's a condo or detached. If you want to include your state, that can help as well. As I can't service everywhere, but I'll quote everybody so you know what you're looking for. Some people have been emailing me other things recently. Hey, should I take this job? Or, hey, should I sell my home since I got so much profit so quickly and take the money and run? You can always ask me whatever you want. Listen, I'm going to try to get back to everybody. The purpose of this channel is completely and totally for you. Like, I don't need to do this. Obviously, I want to help as many people as I can. And it's great when I can help people with a home loan. That's what's in it for me. I'm not charging any fees. I don't have any classes for you to sign up for. Nothing like that. This is it right here. So if you want to support me, you want to support the channel, use this for your home loan needs, and that's what you can do. All right. So take a quick look at Bitcoin here, and you can see we're still in this wedge, and yesterday we were in the middle of it. Now we're a little bit more towards the higher side. It looks like there's some support that's picking up right here, and which would be a continuation trade higher. There's a lot that needs to happen for Bitcoin to get through some of these different headwinds, but from a macro perspective, still very bullish as far as how this is set up. I know a lot of people say, well, we've been in a bear market. It's gone down 50% from the highs or close to it. And so that may have been our bear market right here, just from there to there. And now we're consolidating in this this big range and sort of trying to find the next leg higher, meanwhile making these higher lows, which is always good to see. So expectation, of course, long-term for Bitcoin is higher, and hopefully we'll have some good weeks ahead. We can put some stuff behind us. There's several things happening. There's like $14 billion earmarked just in the crypto world right now, including El Salvador's bond offering, which is going to happen, I believe, next week. There's all earmarked to buy Bitcoin. These are, Tether, for example, they're buying $1.2 billion in Bitcoin. There's another one that's buying $10 billion. El Salvador is buying $500 million. There's a lot of money allocated and earmarked going into Bitcoin. And when we see regulatory clarity here in the U.S., you're going to see a lot more as well. So I feel pretty good about it. We talked about GBTC the other day. There's a discount to that. It might be a great way to get into it if you want to. Always scale in, never put a ton of money in, and never invest any money that you're not willing to lose on anything. Everything can go to zero. Just remember that. This isn't some financial advice. It's just what I'm seeing. This is what I am doing. And I recommend if you haven't done your homework or research on this yet, might be a good time to do that. All right, guys. Hey, that's it for me. Have a terrific weekend, and I will be here if you need me. Take care.